want to talk to you about this shift in the global discourse, and you talk about it in your book with regards to the way that the world is viewing India and China. You know, up until maybe 2008 and the Lehman Brothers crisis, China could do nothing wrong, and India was a story of missed opportunities and disappointments. There's been a shift, hasn't it?
Well, there's been at the subterranean level, it's a dramatic shift. But India, by its very nature, is a country which doesn't come out and strut too much on the world stage. So therefore, at the subterranean level, it's a great shift, while it's not so manifest in commentary. But it's changing. You're right. You're very right. And I think the reason for that is that once the Lehman collapse happened, and once the Western world went into such a severe economic crisis, it was expected that the transmission effects of that on India and China would be severe.
Yeah.
Everyone expected the transmission effects to be severe on India because, as you said, India's story is not that well known.
And there was a surprise there, wasn't it?
And there was a surprise because China fell much more than India. China fell from 13% to 6%. We fell from 9% to 6.7%.
Yeah.
So in percentage terms, we fell half. Or put it the other way around, we outperformed China by half.
It has to be said that in particular India was very resilient going into the crisis. There wasn't a single quarter in which we had quarter-on-quarter decline in GDP. That was very impressive, especially given that in the fourth quarter of 2008, first quarter of 2009, China's GDP contracted really very sharply. It then responded with a huge monetary stimulus, the biggest in the world, which of course has helped China rebound very strongly, but it has created its own problems, which China is now faced with.
So India's bounced back from that 6.7 and then China's from 6. And then India's bounce back also happened a little bit more sturdy. For instance, we had much lower debt. Our banks did not go out and lend the way Chinese banks lend. We had much less debt in our turnaround. We also had a bit of inflation in our turnaround. So in nominal terms, the Indian economy started growing twice as fast as China.
Sure.
While China turned around, but China turned around on the tailwind of huge debt.
In mid-2008, the Chinese central government announced a 4 trillion yuan stimulus package to spend its way out of recession. However, the central leadership only committed to funding 1/3 of the total package, leaving the rest to local governments and banks. Circumventing the law prohibiting such action, most local governments set up as many as 8,000 investment platforms to obtain bank loans. Most of these loans are liable to go bad. Can a country keep growing by wasting household savings?
So I think the world sat up and noticed that A, this one has bounced up quicker than it was expected to. B, it's bounced off a higher level.
Yeah.
C, the bounce back is sturdier.
Yeah. You know, talking about the steady recovery that India has made, and I want to go into the evolution really of the India story, and I'm not going to go much into the past, but only in the last decade or so. And you talk about this in your book, the romance that the Western world has had with India, say starting about 1999. You know, it's never really been a full-blown romance in that sense. They've wooed us, they've suited us, and then they've sort of stepped back because of external reasons and internal reasons as well. But has there now been a shift? The financial decisions, the hedging instrument that you talk about India being, has that now shifted to it being more strategic in nature?
I would think so. I would think so. And a lot of that, a lot of the reason for India not being that much on the agenda in the late 90s and early 2000s was India was a shy bride.
Yeah.
We've always been a bit of a shy bride. We don't come out and talk. And I believe that that's a disadvantage for us. I believe that in today's world, India needs to put itself out much more. But you're right that now, with the kind of post-Lehman strength that India has shown, the world is saying, yes, now here is a country which we can't lump with others. Here is a country which possibly is an asset class by itself.
Is it now being treated as a separate asset class?
I would think so. If not immediately, then I think a lot of people are saying, let's look at this country a little bit more closely rather than lump it into either a BRICS economy or an emerging markets economy.
BRICS, an acronym for the grouping of Brazil, Russia, India and China, was coined by Goldman Sachs in 2001. They stated that if combined, these 4 rapidly developing economies would eclipse the combined economies of the current richest countries of the world by 2050. The BRICS currently account for more than a quarter of the world's land area and more than 40% of the world's population.
I was never a proponent of the approach to investing in emerging markets using the concept of BRIC, because the BRIC economies are four very different economies, and within that BRIC acronym, I would also argue that economic development and economic policy has been very different in India relative to China. And I think investors now recognize that. So, whereas over the last 5-7 years, a number of funds have been set up which have been denominated as BRIC funds just to invest in those four economies. I think going forward there are going to be there's going to be much more selection by investors with India standing out.
They want to discover, as Stephen Roach calls, India's dirty little secret.
That's right, which he's written so brilliantly about, that at the micro level, India seems to have all the strengths. Much more entrepreneurial companies, companies which run on much better corporate governance standards, and even at the more fundamental level, companies which are privately owned and therefore enterprise driven. I mean, China, for instance, has done spectacular stuff, but remember, most of those companies are Chinese state owned. I think in the top 100 Chinese companies, about just 10 are quote-unquote private, and even those are owned by members of the Communist Party. So if you put the Communist Party and the government together, then I think all of the top of Chinese economy is owned by the government or the party. So in that sense, they don't have the kind of entrepreneurial savvy that Indian companies have. If you look at India, the share of the government has shrunk dramatically.
While China has embarked on a second wave of nationalization, in a sense.
Absolutely, absolutely. In fact, Chinese state companies have gone and acquired well-run private companies, and that's created a lot of resentment in China's burgeoning private sector. I mean, China, it's not that China doesn't have a private sector. It's got a very strong private sector, but it's just that it's not dominating their economy the way it does in India.
For both China and India, there are very many constraints to ongoing growth. There are also many opportunities. In China's case, it has to do with the continuing the very well-run process of economic experiments that the party has run in China, and disseminating the successful results of the experiments. And they can continue to do that. They can continue to develop. It is an open question whether the single-party fiat authority model that the party has used in the last 3 or 4 decades, whether that will continue to function quite as well without some adjustments to it. So that's their main challenge. And likewise, every country has its own set of challenges. But I think the upside on growth is still a long way to go.
Well, when we come back from the break, we learn more from Raghav on how China scores over India or how India scores over China. Stay on with us.